Welcome back to Crypto Learning Community. Today I found something that accurately predicts Bitcoin bottoms. I mean, it's incredibly accurate. I was just kind of playing around and the consistency is amazing. So I'm going to show you all that. Before we get into that though, I want to show confluence of the zones, and then it's all going to lead up to how we get this Bitcoin bottom of the next cycle next year. So everybody knows Fibonacci retracement. That puts our 786 and 816, considering or assuming we already have the all-time high in, starting at 38.5. So we get a POI down to about 25k if I include this order block. So that's my zone. It's about 38.5 to 25. I know it seems big, but definitely going to be buying a lot in there. Or at least looking for bullishness. So let's get straight into how we predict the bottom, right? So if we take a look at past cycles and are measuring from previous bottom to the next cycle's bottom, we get 8250. We round it to 8200. Okay. So the rule of thumb is those two decimal places just round. So I've got it to 8200 on here, and then this cycle bottom to this cycle bottom gives us 1777. Rounded is 1800%, and then we also have this cycle bottom to this cycle bottom gives us 395%, which rounded up is 400%. Okay, so now that we have these numbers, well, how can we use these numbers, right? Simple. We divide our 8200 by 1800. So 8200 divided by 1800 gives us a 4.55555. That's our ratio. Okay, let's see if we have any consistencies. So we have 1800 divided by 400. Again, 4.5. Now these are really the only two scenarios, and we could test because of cycles. Not until we do another Bitcoin cycle. I'm not going to use this. That's not a cycle. But this data is very powerful. This is consistently spitting out this 4.5 number. So why is this 4.5 ratio number so powerful? Because we can now use it to predict this square. This is simple math, and I'll show you how this works. So I'll start with this guy and plugging in that ratio backwards now. So 8200, okay, divided by 4.5 will give us our 1800 number, or 4.555, sorry. Again, 1800 divided by 4.5 gives us our 400. All right, well then, here's the big conclusion. 400 divided by 4.5 gives us a whole lot of 8s. All right. So let's measure that out. 88.8% puts us at roughly 29,000. So definitely confluence on that 30k level with that demand zone, deep discount, a little farther than the 816 you would want to use Fibonacci for, but keep an eye on this level. As far as pullbacks go, assuming the all-time high is in, that would be a pullback of 76%. Keep that in mind, because we do have diminishing returns, right? So let's actually start. Let's start from this cycle. Measuring top to bottom, we have diminishing or we have a pullback of 93%. No, almost pretty much 94. Actually, I should use that. Okay, 87%. So it's a sharp pullback, but not as sharp as the previous cycle. Again, 84%. See how it's getting smaller. 77%. Okay. Pullback, assuming all-time high is already in, gives us 76%. So we're this kind of tells me, you know, hey, all-time high is just about in, right? There are some interesting things if we were to look at Mark Cypher B. This is going a little extra, but I just want to throw this in here. Is Mark Cypher B money flow has been coming out, and we have cascading divergences. It's not the most. It's not going to give you the most accurate high, but definitely these red dots, the divergence between these highs on monthly time frames. No joke. This is no joke. Divergence here, right, gave us that pullback. Money flow coming out. Again, monthly time frame divergence. Money flow coming out. Gave us this cycle's pullback. That was the 77%. And now we have, so we went from a single momentum wave to a double momentum wave to now a triple momentum wave. This guys, this isn't pretty. Now we did have a divergence here as well. Between the divergent, or those highs, we had a push for 48%, but the divergence gave us a pullback of 32%. Okay, right? Higher high, lower high momentum waves. Money flow came up. Now we have a bit of flatlining on money flow. You could even argue curving out a little bit, but hey, it could just be a little wavy thing it's doing. Our momentum wave does not look pretty. It does have room, so that does have, Bitcoin has that going for it, and this is monthly time frame. So I really think this month and next month, if we don't have like a lot of strength and maintain that strength, there's no reason we can start getting a red dot and start pulling back, which could cascade us all the way down. Just check the weekly real quick. Yeah, weekly just confirmed bearish divergence with money flow coming out. I mean, yeah, that doesn't look good. Last time we had this weekly bear div was right here. I remember calling that when Trump came to talk. Oh, such easy trade. Yeah, money flow coming out, bear div. So careful, guys. Careful, caution, right? Manage your risk accordingly. Do this data what you will. Thank you all for watching. God bless.